time now for our 360 round. For that, I want to bring in our panel to discuss the latest in the crypto space. We've got Tyrone Ross, CEO and principal of 401 Financial, and Steve Larsen, founder and president of Columbia Advisory Partners. Thank you both for joining us today. And I want to zoom out from Circle. We were just talking about Circle's quarterly report. Shares moving higher. We've got some momentum in Bitcoin and Ethereum right now. But if we look out over crypto, over the space over the next year, what's the underappreciated potential stumbling block? Because it feels like the wind is at the back of crypto.
Yeah, well, we've eliminated the biggest one recently, and that is all the regulatory uncertainty. So we had the passing of some of the legislation that has made it easier, particularly with stable coins and Circle. But really, I think it's just congressional gridlock. There's some very obvious market structure changes that need to happen, and it's going well so far, but that could easily go back to what we've seen in the past couple of years and be a stumbling block for crypto moving forward.
All right, Tyrone, now that question for you, I think we've got your audio all cleared now. What could be potentially a stumbling block to what's been a very, well-liked asset class this year?
The mute button didn't want me to be great, but I'm back. I think a stumbling block is the lack of appreciation for all of the regulatory change that has been positive, but ultimately, how do traditional financial institutions that are not prepared for these tailwinds, how do they get up to speed? And I think, yes, it's great for the space overall that some of these regulatory hurdles have been lowered, but the traditional finance space is ill prepared to be able to capitalize on it. So I think it's going to take a longer time than what most think.
Okay. And then, Steve, I want to get your thoughts on this. When you think about like distribution deals like Circle's placement on Coinbase, how does that help in terms of offsetting any risk that Circle may have to deal with?
Yeah, like most businesses, distribution is everything, and Circle is first to the game with the biggest partnership. So, for example, they're going to be powering Binance's stablecoin, and they're able to do that because of their regulatory and compliance structure, and really almost outsource all of the compliance they've built over the last several years. And also, there's the partnership with Stripe. Stripe now accepting crypto payments just as a matter of business. It's about half the fees for a business than it is to collect a credit card. So these partnerships are going to be huge for Circle, and there'll be some other opportunities for other stable coins. But again, there's a first mover advantage here that I think is Circle's really taken advantage of nicely.
And then, Tyrone, how do you view that relationship strategically between Circle and Coinbase? Is it a win-win for both companies?
Yeah, I think so. I mean, I'm very bearish Circle. I mean, I like the fact today, again, as a notable crypto hippie, as I always tell you, I think the best part of their earnings report is they announced their layer one blockchain ARC. But I think there's going to be fierce competition here. I mean, Stripe announced yesterday that they're going to launch their own L1. They've bought Privy. I don't know. I think Circle has an uphill climb. And I think, again, when you have roughly half of the revenues going to Coinbase, that is on their platform, which is their largest customer, and you draw out and you look at this from a true crypto perspective, I think they got a lot more headwinds than tailwinds here.
Steve, I want to draw out something Tyrone mentioned earlier about institutional adoption and the gap there. What do you think needs to happen to further broaden out institutional adoption?
Yeah, Tyrone brings up a great point. We have made all this progress, and do the institutions and some of the bigger investors here really realize what's going on and what the opportunities are. And so I think what needs to happen is just some of the bigger players need to start moving the distribution of their products on chain. So of course, it's much easier to just buy something, whether it be a stock, a fund, even a real estate deal, on chain logistically than it is to go through the traditional market system. And really, it's got to be driven by the availability, I think, of these products. The demand seems to be there, but there's not a lot of incentive for the distributors to move their products over there. So that's what I think we need to see, some of the tokenization of these real world assets, like stocks and bonds, and more specifically, real estate. And then I think we'll start to see some of that adoption.
And then, Tyrone, I'll yield the floor to you. Last question. We have just under a minute left. What's your view? I asked about stumbling block. What's the biggest catalyst that you see for this space, for crypto, over the next year?
Ooh, there's so many, but I think one that I've been talking about internally with my partner is, and Steve just alluded to it, a lot of what we're seeing now from the traditional companies and then a lot of the the players that have been in crypto for a while is the movement to on-chain, basically moving assets on a blockchain to have them move freely, securely, cheaper, faster. I think that is, again, being underestimated. That is a big push here, and you're seeing that from some of the largest institutions in the world, and it is far from being priced in.
All right, that's Tyrone Ross of 401 Financial and Steve Larsen of Columbia Advisory Partners. Thank you both.